Happy 5 Minute Friday, friends. Dr. Holly here. We are jumping into what is a profit and loss statement today and how do you read one, why do you need to read one, etc. So just have to say, happy fall, y'all. One of my favorite seasons, of course. I really love all the seasons. There's really nothing wrong with any of them. But as next week is the end of quarter 3 for this year, I just want to give this little primer lesson specifically about that profit and loss report because it's very critical to look at when you're doing a quarterly review. So next week, all of my 5 Minute Friday video and resources I'm going to be sending out are going to be all around doing your own quarterly review. So I love wrapping up a quarter. I really love also planning in the chunk of a 90-day time frame because there's different trends that come along with that, different things that happen throughout the quarter, throughout the season, etc. And so sometimes it's really good to sort of equalize what we're looking at rather than just looking at month to month. Now, I do encourage you to have monthly goals. We'll talk about all of that through the quarterly review. But what is the profit and loss statement? How do you figure it out? How do you read it? Okay, so in my online course where I teach you specifically how to do your own profit first assessment and figuring out how much you designated for profit, essentially how you pay yourself, how much you've contributed to taxes, and what your overhead is. I have a lesson where I break it down as essentially, if you've not been intentional with your profit, if your profits has always been a surprise to you, how to even find out how much it was, okay? So a couple different ways here. We can do what's called bank balance accounting, where we can look at just how much cash you had in the bank from January 1 of this year to January 1 of last year, where you can do the 31st to the 31st. Like, how much difference did you either accumulate or did you take away in that calendar year? And that's just all of your cash flows going in and out. But essentially what we just want to capture is, was there a big surplus for that year? Or was there a deficit? Okay, was it more or less? Not meaning it has to be a negative number. But you're just looking to compare just a little snapshot, okay? So again, also if you've been intentional with any sort of savings, has your savings grown? That is essentially what's called a profit, okay? So a profit remains a profit if it's still in your bank, or if you take it as a profit distribution, or if you have shareholders in your company and you distribute that out to your shareholders, okay? If you say, I had a profit of this and I spent it on that, that means you erased your profit, okay? You just turn that into an operating expense if you spent the money. If you replowed that quote profit back into your business, you erased your profits and you turned it into an expense, okay? So some hard truths there. But business owners do this all the time. They're like, well, I want to reinvest my profits back into the business. Yeah, okay, but they literally erased their profit status when you spent them on the business, okay? It became a new business expense, okay? So big thing that I'm going to show you a real profit and loss statement here, and it's a 2-pager, okay? So based on the size and orientation of this screen, you might have to zoom in a little bit to see what we're talking about, but I'm going to try to point out as much as I can for you. What I want you to remember, big thing here with profit and loss, there's a lot we're putting together here. We're looking at very cumulatively a big picture, but there's also a couple things we're not looking at. So debt and depreciation and any sort of owner's draw or owner's distribution are the big 3 things that you do not see in a profit and loss statement. What does that mean? So what are we seeing, okay? This is real life, used with permission, okay? Over here at the top of a profit and loss statement, you're going to have all of your income. So all of your generated revenue. I've just, redacted some information here that might have given away a little bit more about where this money came from, but I really like to see exactly where the money comes from. So you'll see, money from insurance proceeds, money from any commissions, money from patients. There's other line items here of different service offerings within this business, and it breaks it down essentially where the cash came from, okay? So we have this big total fee-for-service income, about $176,000 in case you can't see that number. We also have some products sold, some refunds that are subtracted back out, and then we also have the cost of those goods that were sold, okay? So that gives us this gross profit here of $238,000, okay? Great number. Now, everything else is your expenses, okay? So we're going to be eating away at this 238 to get to our bottom line, which says this is your actual profit or loss. So if this is a positive number, it's your profit. If it's a negative number, it's your loss. Okay. So I love the level of detail that we are seeing here for these expenses. Okay. There's my 5 minutes. We are breaking out, in case you can't see this. We don't just have an advertising category. I have specifically what was spent on advertising. Okay. We don't just have insurance expense. I want to know, how much did you spend on work comp? How much did you spend on liability? How much did you spend on malpractice? Okay. This report was generated out of the QuickBooks software. QuickBooks is very common software that's used for bookkeeping and accounting in your practice. Am I recommending that you go in there and look at your QuickBooks? Yeah, if you're the owner of your business, you need to have access to your QuickBooks. You need to be able to go in there and look at it. I also highly recommend delegating this out. If this is not your area of expertise, listen, I had this knowledge base before I ever came to chiropractic. So I did this for my own practice. Okay. I made my own reports and I kept up with my own bookkeeping. If I were to start over again today, I would not recommend you do that. I think you need to go find a subject matter expert to do your bookkeeping for you. And you have to have regular communication with this person, and they have to be sending you these reports. So when you get this report, what are you looking for? Okay. We've got to know that gross revenue matches up to your other statistics in your practice. We're going to talk about this more in your quarterly review for next week. You want to look at these expenses. If something jumps out at you, it probably means that it's miscategorized, and we need to make sure it's right. Because guess what? When you go to file taxes at the end of the year, you're going to be responsible for what's going on in these numbers, and we have to make sure nothing is miscategorized, okay? So in this report, again, we saw that total number $238,000 was generated in the business. We have these expenses. Our expenses looks like they're coming out at $181. So that gave us that difference of about $54,000, okay? Going to talk more next week about what that number really means. Have a good weekend.